Okay, so we had a discussion briefly about market balance market breakouts in the trade room last week, and I wanted to share with you just a post which I posted on Netpicks.com, which will be in this video description, and also just this video of a trade that I took on Friday that was in the FTSE futures. This was a kind of a breakout in the sense that I was talking about in the post a change in behavior, and you can see that what we had in the in the context chart here was we had a move up last week, the back end of last week. This was Friday here, and this was Monday. Tuesday we pivoted around the high of the Monday, and again that area was important on Wednesday, but it extended a little bit. Thursday we tried to break into this gap zone, this close to open gap zone, but we actually failed early on, and it became a range extension. We got to the high of the range. You can see that shorts trying to play this had to eventually cover, and it accelerated higher, but there was good selling that came there still. And this range extension actually did matter, because you can see that this was the cash close of that session, and also we were pivoting here. These are 15-minute bars. I know they're small, but it shows you that this area was pretty important, which was the initial low of the day and the range extension for these 3 days. So once it couldn't get through that, we looked to extend the range lower for the day, not this range here, but for the day, and that's what happened. And it ended up coming to this level here, this minor swing level on the full session close from Monday. So this became a relatively important area, not necessarily a change in behavior, but an important area nonetheless. And this level here at Monday's low, 18.5, was pretty important for a change in behavior to happen. You can see that because we've moved up, we've balanced, we've moved back, and moving back below there would signify a reversal in that behavior. And there's a big gap zone there. It's like a vacuum of price, and yes, it's not a big range gap, but from close to open here, there was nothing actually that traded, and so it needed to retest. If it gets through there, it could accelerate, and that's just a possibility. That's where the energy lies. So what we can see here is we did actually open lower. We opened below this 40, this low of the day, and we did a bit of a range initially, which is often typical when opening out of range, and a move higher or lower at this time of day would signify potential for the market to continue in that direction, that initial direction. We got a setup here. It wasn't after the 9 bars, which was the jump for the jump line 9 to catch up, but because of the setup, this was actually one that I took anyway, because of the way the market was configured. So we moved lower here, took a short at 28.5. You can see that the target 2 here, which was the fixed target for the position for the trade, was well ahead of the key 18.5. So no change in behavior needed for that first target and for the money management to get triggered. You can see initially it did just pull back a little bit before then pushing down and hitting that target 1. Now next up is going to be 18.5, and as that's such a key level and it could bounce from that area, I was at this point trailing the jump line 4, not the jump line 9, and you can see it actually went straight through. And so at this point we don't know whether it's a break or an extension, and we've got to that minor level at I think it was 9.5, 10. The low there was at Sorry, the high there even was at 9.5. So it's pretty much got there. It's got through by a couple of ticks, and then it started to bounce. And you can see that the jump line 4 trailer was then hit, and we came back and we retested the key area at 18.5. Now that did breach by a few ticks, but you can see that just how important the area was, and it then did start to extend. We've got through, made a lower low, didn't hold for long, and actually came back. And this is why sometimes you can see that now this third position was running behind the 50 EMA, and this is something that I've been trying to teach, recognizing when to run this type of trailer, when there's a good potential for the market to move, because it's changing behavior, not that you should be running this kind of big stop all the time. But in this case you can be, and the stop here would actually not have been at 18.5. You'd have manually adjusted it to 21.5, 2 ticks beyond this last swing high, to try to stay in that trade. It didn't matter in this case, and what we can see is it ran lower and lower and lower and lower, and in the end what was an average of I believe 10 points to trade became an average of around 20 points per position. So it actually doubled your average winner per position within the trade. So that's if you're trading a 3 lot, or if you're trading 6, 2 contracts per position, 12, 4 per position, or whatever it might be. Your average per trade, per position, per lot would have been 40 ticks in this case, rather than 20, or 20 points instead of 10 points. So it shows you when there's a market, there's a change in the market, and there's a potential for the market to move a long way. You can really capitalize on that if you spot it early and take appropriate steps to adjust your trading strategy. Thanks for watching, and I'll see you next time.